Welcome back to Accounting Space. In this video, we're going to look at the preparation of the cash receipt journal, cash payment journal, and also the bank reconciliation segment. So our question has got 34 minutes, which are required for you to spend on average. And then this question two on this question paper, and it is the following information appeared in the books of Trophy Supermarket, the bank account and the debt balance of 96,845 rands on 1 July 2020. Then a comparison of the bank statement with the cash receipts and payments on 31 July 2020 reveal the following difference. So we've got the differences that we are given there that are going down to additional information, which is our I. And going on to the next page, you'll see that we've got a continuation of the information that we are given. Then E is representing the required part, whereby the first item is requiring us to prepare the cash receipts journal, and the second part is cash payment journal, and then 2.4 bank reconciliation statement. And our question has got a total of 37 marks. So going back to our question, obviously we want to know in terms of our opening balance, but before we go there, we can try to see in terms of the cash receipts journal and the cash payment journal, as we are having pre-entered figure there. Opening balances are pre-entered in terms of cash receipts journal and cash payment journal. Cash receipts journal, we've got our salary accounts, about purchases, equipment, and also we have the debtors account, the debtors also being pre-entered there. Then if you go down to the cash payments journal, we are also seeing that we have got some pre-entered figures that are there as our opening balances are there. So we can use those balances as we calculate now the totals beneath that. So going back to the beginning of the question, we are here. So we just want to try to identify in terms of the balances that we are going to start with. So let's try to see. At the beginning of the question, you see that we are given that the bank account had a debit balance of 96,845 on July 2020. So this is opening balance for the bank account. So we go to the bank account and put our 96,845 as our opening balance, which is obviously a debit, so a good debt side. So we go there, and then in terms of the date that we have there, we are seeing that we have got 1 July. So we're not just going to say 1 July on the date column. So go there. So you see that we are here. This is our bank account, and we are saying here on the date is 1 July, and all the details is going to be our balance and PT. Then the amount that we have there is 6,845. And then I will check in terms of the next balance that we are given. So we are also told that a comparison of the bank statement with the cash receipts payment journal of 31 July, we have created the following differences. So we are not given the differences that we need to adjust. So the first item is saying the bank statements from UPK Bank showed a favorable balance of 3,897. So it means this is the, remember, when it's unfavorable, it will be a debit balance on the bank's reconciliation. When it's favorable, that's when it's going to be our credit balance. So we go to the debit side and put our opening balance of the bank reconciliation. So this is our bank reconciliation. So we are saying this is a debit balance, so we just going to describe it as a debit balance estimate statement. So here's my bank statement, and then the figure that we have, we can just refer back. So it's 163,897. 163,897 on the debit side. We have stored B. Well, if not presented payment, these they are there in our journals. So in our journals they are correct, but they are not reflecting in our bank on our bank statement. So we need to put them on our bank reconciliation. So remember, when there are checks that have been issued, it means they should appear under the cash payments journal in our books, but on the bank statement it will be on the debit side. So we're going to put all of them on the debits of bank reconciliation statement. So we are going to just go there and put them on the debit side of the bank reconciliation. We are here, this is our bank reconciliation. So we can leave a space here. Remember, if there's an outstanding check, so outstanding deposit, but opening balance. So we can just leave us one line there for that allowance. And here we are saying debit outstanding checks. debit your outstanding, debit your outstanding checks. And then we have got check number. We have got check number A823. And the A823, we can just try to see in terms of the amount of the A823, just take 4,000 here. So we are going to see take 4,000. And then we check in terms of the next check, A824, 46,000. Check the next one. The next one is A825, 65,430. Then this is basically what we have. And then we try to see now in terms of the next adjustment. But usually in some questions, after having identified that there are outstanding checks that are there, you need to go beneath on this explanation that just below the outstanding checks. Maybe there is an explanation about these outstanding checks. Maybe one of them is lost, so you need to remove it. So you would not need to adjust it in the bank reconciliation statement. You have to go back to journals and remove it. So what you're saying is you notice some outstanding checks, just go beneath where they are listed to check if there's any explanation that is pertaining those checks. So we go to C. We'll see check number AA42 to the value of 91,400 sent to Passau traders as payment of the account must be cancelled. This check got lost in the post. So you'll see that check AA42 is not part of these checks. So we obviously are going to write it off using this amount 91,400. So what we are saying is this check, remember, whenever a check is issued, it's recorded there and there in the books, in the journals, particularly under the cash payment journal, it will be there. So when it gets lost along the way, it means we have to remove it from the cash payment journal. And removing it means we go to the opposite side, that is the cash journal, and end that. So in the on the bank reconciliation statement, it's not going to affect anything because it didn't reach the bank. So we are not going to update it in the bank reconciliation. We only update it in the journals. So we are going to the cash receipts journal and put our 91,400. And we are seeing that all the details, we are going to put the name of the person where or the business where we send the check for, this Passau traders. So we go there, check for all the dates. I remember we're going to put the end of the period state one. This one is 1 July, 1/7. This one is state 1 July, so we'll say state 1/7. And then all the document number, we are just going to put our BS. And then all the details, we are saying the name of the person we are detailed check who is Passau trader. So we're going to say Passau traders. But obviously, you are not going to check. We are not going to check if this amount is under sundry accounts. So it's very critical here that you check if it qualifies under sundry accounts, purchases, equipment, or debtors. So it has to be entered twice. It has to be mandatory to be entered in the bank column, and then you choose in these columns which one does it qualify. So this one is a, if you go back, let's try to see. You see that this person was a creditor, so creditors control. So we check there in terms of the columns that we have. We would purchase, it doesn't qualify. We check there in terms of the entries that we have. We have got our this one should be our sales, so we can just try to adjust for that one. This column that we have here, we can just remove that. Purchases supposed to be sales. So we are saying here we have sales. So we are saying does this amount qualify under sales, equipment, or debtors? it doesn't qualify, it means you have to put it under sundry accounts. So you see that this is a creditors control figure that we are writing off. So it doesn't qualify in these three. So we just put it under sundry. And we are saying the amount that we have. If you go back again to check in terms of the amount, we have got 91,400. So we are saying 91,400, which is to come here. And on the description, we know that all the details we are now saying this is a creditors control figure. So then we put it again in the bank column. So we are just saying 91,400. So we go and see in terms of the next transaction, which is now saying vanilla settled is the account that depositing 45,000 directly into the current account of Chopis Limited, Chopis Supermarket. So this deposit was made directly to the bank. So it's we can only get to know about it as a business when we get hold of the bank statement. So it's there on the bank statements, but in the books it's not yet there. That is indication journal to show that there's a deposit that was made. So remember, it will be created on the bank statement and debited into a bank account, debited, which means it's under KHSC journal. So we are going to update it there and put it under KHSC journal. We've got 45,000. So remember all the description, this was made by Fenila. So we can take note of that. So we are here. Still other cases, journal, and we are saying in terms of the details, we are saying Fenila. And when we see that it's a deposit that was made by a settled day account. So it means the specific moment this one is the data. So we are just going to say put it under, so it means it qualifies under the column for our data. So we are going to, if it qualifies under data, it means you're not going to put it under salary. So here we have the amount that we have is 45,000, so we say 45,000. And obviously it has to be under the bank again. So here we are saying 45,000. So this is what we have. Then you can try to see in terms of the next that we have. We have got the next one that we have there. That is saying if a credit entered 23,500 rands on 9 July was in respect of a deposit that was that Chopis Bakery made into the account, but it appeared on the bank account of Chopis Supermarket. So it means the bank reconciliation that we are preparing is for Chopis Supermarket, but we've got an end of 23,500 that was appearing on the bank statement of Chopis Supermarket, which is not supposed to be there. So we have to remove it. So removing it, you go to the debit side of the bank. Remember, it's on the credit side of the bank statement. So you have to go to the debit side to remove it. So we're going to the debit side of the bank reconciliation statement. So we go there. So this is our bank reconciliation. Bank reconciliation. So we are saying we're just correcting. We are just debiting a bank error. So this is just debit bank error. Debit the bank error. The amount that we have, remember, is 23,500. So we go back and try to see in terms of the next that we have. So we have adjusted for this one. So we are here on F. The current account of Chopis Supermarket was not yet credited with a deposit of 139,707 made on 31 July 2020. 31 July 2020, we go back there and check where our period is ending. It's also ending on 31 July 2020. So it means this deposit was made on the last day of the period. So obviously it's not yet processed in the bank. So we need to put it on the bank reconciliation by putting on the credit side. Remember, deposits, we put them on the credit side of the bank statement. So we're going to put it as an outstanding deposit, 139,607 on the bank reconciliation statement. So here, this is our bank reconciliation statement. Remember, we left a space here to say if there's an outstanding deposit, we're supposed to put it there. So we are saying credit outstanding deposit. And we are saying the amount that we have there. The amount is 139,607. So this is what we have, and then we can go to the next one, which is now on our G. Carlos' check of 12,900 in payment of his account had been returned by the bank with failed to draw insufficient funds. So we've got a check of 12,900 that was returned or dishonored in the bank. So what it means is this was sent by Carlos, so it means we are supposed to receive it. So the moment we received the check, we recorded in the cash receipt journal. But when we arrived at the bank, it was dishonored. So it means it's there in our journals, but it's not appearing on the bank statement because it was not processed. So in our books, we are going to remove it out of the cash receipt journal by going to the cash payment journal and put it there. Then I'll see that on the description is from Carlos. So I just want to say Carlos, and then we make a reference that it's a repair to draw check. So we go there and just enter those terms of cash payments and journal. So we are here. So remember, in terms of our opening balances, we are pre-entered. They are there. These are the opening balance that we have in terms of our cash payment journal. And then here we are saying on the date column, with end of the period, so we are saying 31/7. And then we are saying we have got a check from Carlos, so we are saying Carlos. And in brackets, we are saying fair to draw, so we are saying RD. And then on the sundry accounts, we have all the details. Remember, this is a check from a data that has been written off that we are removing in our books. So it doesn't qualify under the other columns. Well, remember the other columns we have got purchases. If it doesn't qualify, equipment purchases. So if it doesn't qualify, we put it under sundry accounts. So the amount that we have there, put it here in the amount which is 12,900. 20,000, 20,900. And then on the details, we are saying it's a debtors control. And obviously, it has to come under bank. We also put it under bank. So this is what we did. Obviously, we now go and try to see in terms of the next one that we have, which is now on H. So we are saying H is saying a check to the value of 120,300 withdrawn by the head office out of their current account appears on the business bank statement. So it means there's a check that was withdrawn. See, this man was withdrawn. It was on the debit side of the bank statement, but it's not supposed to be there. So it means we have to cancel it. By canceling it, we go to the credit side of the bank statement and remove it. Remember, it's appearing on the debit side of the bank statement, so removing it, we go to the credit side. So the donors are not going to be affected because this was just processed by the bank as a mistake, and in the donors it wasn't there. So we are just going to the bank reconciliation. We are here, and we are saying this is we are crediting a bank error. Credit bank error, and the amount that we have is we put an amount of 120,000. Then after that, we try to see again in terms of the next transaction that we have, which is now on this is now the bank statement showed the monthly stock order of 11,000 rands in favor of security TRC to pay the owner's alarm system account. So this is a stop order, and it is processed in the bank first, and it appears on the bank statement, but it won't be there in the journal. So we can only get to know about it when we get out of bank statement. So we are going to update it in our journals. When it's a step order, it's going to be debited on our bank statement. So it means in our books, in the bank account, it will be on the credit side, which is under the cash payment journal, 11,000. So we go there and we see that it was to pay the owner's alarm system. So these are drawings. And we see that it's a stop order for in favor of security TRC. So security TRC is going to be the pay. We go there and see in terms of the adjustments under the cash payment journal. So this is our cash payment journal. Also, we're seeing uh, under the pay, we are seeing is security TRC. So we are saying security TRC, and we are saying their drawings. And we check there the columns that we have purchases, equipment, and bank charges. Drawings do not qualify, so they come under sundry. So we are saying drawings. There's amount of 11,000. Obviously, it also has to be under bank. So we are saying 11,000 is under E bank again. Right. This is what we have. Then we can go now to see in terms of the next that we have. So on the next one is on J, which is saying the bank statement showed a debit order of 96,585 in favor of outsurance, as payment of insurance, as well as the bank charges of 58,400. So these items are on the bank statement, but they are not there in our journal. So remember, all this should go to the cash payment journal, because we got a debit order, and a debit order will be debited on the bank statement. So it means, these are going to be credited in the bank account, which is under the cash payment journal. The same is happening to this one. These are bank charges. They're on the debit side of bank statement, so they should go to the cash payment journal. So we have two. The first one is for 96,585. It's for outsurance, which is the description of the pay outsurance. And then the second one is for the bank, and our bank is UPK Bank. So we are just going to make that adjustment for UPK Bank. So we go there with these two amounts that we have here. So we go to the cash payment journal. Remember, this is our cash payment journal, and we are saying the first one is for outsurance. And all the details, remember, this is an insurance. So we're just going to put it under something. It doesn't qualify under other columns. And the amount that we have there, it's for insurance. We're going to check. It's for 96,000. 585. We will see 1,585. Obviously, it goes under the pay column again. We are saying 96,585. Then we have another one, which also we have to either it's here. The other one is bank charges, which is for UPK Bank. So we go there and we are saying UPK Bank. And UPK Bank, these are bank charges, but we have a column for bank charges, remember, which is here. So we're going to put it here, which is an amount of 58,400 here. So we're saying 58,400. And obviously, it also has to fall under the bill column. 58,400. Let's see. So this is what we have. So and it is our UPK bill. We go to the next one, which is now the K. So we go to K. For the K sale check number A464 for 70,030 was it only actually debited twice on the bank statement. It's on the debit side twice. So by removing one of them, we have to go to the credit side and remove 17,930. So that we are left with one 17,930 on the debit side. So we go to the bank reconciliation. So this is a bank reconciliation, and we are saying we want to remove a debit balance. So we say credit bank error again. This is another bank error. Credit bank error. And in brackets is check number AA46. And we put the amount of 17,930. And then we go and check in terms of next. After that, we've got check number A43 was incorrectly entered in the cash payments journal as 7,290 instead of 9,720. Check was issued to CFC for a laptop. So in the cash payments journal, obviously, it was entered as 9,790 instead of this one. So it was entered with a lesser figure. So you have to calculate the difference by saying 9,720 minus 7,290. And you see that the figure that we are getting there. Let's just try to see what we get. 9,720 is very subtractive. 7,290. We're getting a 2,430. So here we go to 2,430. So this one should be entered again under the cash payment zone so that it reaches correct figure, which is 9,720. So we go to the cash payment zone and put this one and see that this is our cell C in terms of the pay cell C. And we go there, go to the cash payments journal. And this is our cash payment journal. So we are saying for the payee, we are seeing that is cell C. And we are paying for, let's try to share back. We are paying for laptop. The laptop is part of equipment, so come here. You see that we are having a column for equipment, which is here, which is, so we're going to put our amount there, which is 2,430. And obviously, it also has to fall under the bank. So all of them should be there under the bank. And then you choose one of the columns, 2,430. So given that, we go again to check in terms of so this one is the last one on this page, so you can go to the next page and try to see in terms of the remaining adjustment that we have. We've got so it means we've exhausted all the adjustment that we have. So having done that now, we go back to the beginning of the question. There's an instruction that is there that we need to follow. They are saying we go to the question part. Make the submit the case journal, make the submit. Okay. We are not they're not telling us about how to balance our cash receipts and cash payment. Remember, some questions will tell you balance only, maybe they put the total amount on in the bank column. So you need only to add the bank column only to put the total. So this question, there is no instruction about that. So it means we have to add all the totals if there's no instruction. So we go to let's start with our journals. We go to our journals. So what we are saying is we are going to put our double line starting from the amount column to the bank column so that we can put all the totals. So we come here, we put our line, the number which we are saying. This is the last this is our big column, so we can just put another line so that we can leave our double line. So this is what we have in terms of the cash payment journal. So these are our cash payments. So we can start with the for the sundry, whereby we are adding 8,465 plus 12,900 plus 11,000 plus 96,585, and then the total that we are supposed to get there is going to be 137, 130. The next column, we have our purchases. Don't have any other entries, so we're going to put the same figure here, which is 5,460. So we go to the next one, 2,500 plus 2,430. Then the answer that we get is 4,930. Go to the next one, 1,895 plus 58,400. You're going to get 60,295. Then go to the last column, but we are saying you're able from 18,500 plus 12,900 plus 11,000 plus 96,585 plus 2,430 plus 58,200. So the total is going to be 287,850. These are the totals. We go to the cash receipts journal. Same thing, we're going to put our double lines. Starting from our amount here will be so we add in terms of the sundry accounts column 17,330 plus 91,400, and then we get 108,730, and then we go 2,890, and then the next one we've got on the equipment. We try to see there we vote for datas. For datas, we vote our 1,780 plus 45,000, which is going to be 46,000. It's 70. Then we go to the last column, we put 1,290 plus 1,400 plus 45,000, we would get 157,690. So this is what we have. And this column for equipment is not supposed to be there. So we can just maybe try to remove everything in terms of this column. It only appears in the cash payment journal. So this was the error. So we can have these totals, and obviously we have got totals that are going to matter in the bank account. In the bank account, we are going to be concerned with this total, 156,690. It's going to be the total, which is going to represent our cash receipts journal. And for our cash payment journal, we also have a total that is here, 207,815 is going to be the total that is going to matter in our bank account. So we can go to our bank account, whereby the one for cash payment journal should go to the credit side of the bank account. Then the one for cash receipt journal should go to the debit side of the bank account. And then obviously we have an opening balance which we've already updated that we should put there. So we come here in our bank account, we check it. This is our bank account. This is our debit side. And we're saying in the debit side should come the total of the cash receipts journal. So we are saying total receipts. And then in the folio, you represent cash receipts journal. And remember the total that we got there under cash receipts journal is this one, 156,690. So this is total that is going to come here, 157,690. And then we have got the cash payments journal. Total should come here, and the date here is 31 July. Same as the date that is going to come here, 31 July. And it's for total payments. And for that, this is cash payment journal. And then on the total, the amount, obviously, we have it there. We already added the total, which is 207,850. So we are saying 207,850. And then we are going to, after that, you can balance your account, whereby you are going to put your double lines. You are going to put your double lines here. So we see that the total that the beta total should be on the credit side with 207. $207,850. We should also come on the debit side. If we say 207,850 minus 157,790 minus 96,845, you are going to get your 46,990. And then this is going to be your balance sheet. And it should also come here as your balance BD. Same amount, 46,990. So this is our bank account. We've balanced it. So our bank accounts we've balanced, and then our journals also have added the totals. So we are left with the bank reconciliation. So we go to the bank reconciliation. So this is our bank reconciliation. What are we supposed to do? Right. We also going to put our double lines. Obviously, we leave a line here where we're going to put our balance. So let's start by putting our double lines. So we'll say double lines. So you get the total of the debit and the credit, total of the debit and total of the credit. So we're going to see that the greater total should be on the debit side. The greater total should be on the debit side with a total of, let's try to see, with a total of 332,827. This is the total of the debit side, which is the greater total, which is also should also come on the credit side in between the double lines. Then now say 330,827 minus 17,930 minus 128,300 and also minus 139,607. And then you're going to get a balancing figure here of 46,990. So the description now is what is important here. So we are seeing that we say CD on the credit side. So it should be a BD on the debit side. You see. So if it's a BD on the debit, it means the BD in the bank account will be the credit, or the opposite side, the credit. So the BD on the credit. So we are saying it's a credit balance in the bank account. So that's the description. We give the description as per bank account, not as per bank statement. So how can you determine it? You see where the balance figure is, and it represents the CD. So it means the opposite side becomes the BD. So it has a debit balance. So when you go to the bank, it will be a credit balance. So here, the description that you are giving here saying credit balance as per bank account. And the credit balance per bank account is what? 46,990. So this balance that we got here, 46,990 should be the same with the balance of the bank account, which is also here 46,990. So if we have a similar balance like this, they are the same. It means we have reconciled our bank account balance and our bank statement balance correctly. So the reason behind preparing bank reconciliation is we are trying to make the bank account balance equal to the bank statement balance, as we have done here. So the main purpose of preparing the bank reconciliation statement, you see that is to correct the errors that exist between the two documents, that is the bank account in our ledger, the bank statement that is from the bank. So the bank statement is a reflection of the transaction that we're having in our books in the bank account. So what we have for the bank statement should also appear in the bank account in our ledger. If there's a difference, there is need now to prepare the bank reconciliation statement. So this is what we have according to this video. Let's stay tuned for more videos to come. More videos are going to be uploaded. More typical examination questions are going to come. Let's subscribe and share. Let's share the link to our colleagues who are doing introductory accounting and 4. As for this video, I'm signing out. Let's meet again in the next video.